Welcome back. Today we are looking at a financial report titled, Can ASST Stock Hit $10? The 7,500 Bitcoin Catalyst.
It's an analysis of Strive Inc.'s valuation, focused on its Bitcoin holdings and what it would take for an 800% price surge.
Let's just jump right in. The first point, and it's a big one, is about the valuation premium. To get anyone to believe in that $10 potential, the report has to do a much better job justifying why ASST deserves the same valuation premium as a company like MicroStrategy.
Exactly.
The report, it correctly points out that ASST trades at maybe 1.3 times its Bitcoin holdings, while MSTR can get 2.5, even 3x. The whole bull case relies on closing that gap.
And that's the absolute core of it. The weakness here is that just pointing out the difference, well, it isn't enough.
No.
The analysis never really digs into why the market is applying that lower 1.3x multiple in the first place. Is it governance? Is it history?
Right. Without tackling those underlying reasons for the skepticism, that 3x target just feels, it feels like a wish. It doesn't feel mathematically sound.
It feels aspirational, and you can't build an institutional case on aspiration.
No, you can't. MSTR has a history, a management team that's built a certain kind of trust. You can't just ignore that brand difference.
You can't. So my suggestion is this. The report needs a dedicated section that maps out the specific steps AST management has to take.
And not just buy more Bitcoin.
No. Tangible, measurable steps to earn institutional trust and actually justify that multiple expansion. That turns this from just an observation into a real actionable roadmap.
So what would that look like in practice?
Well, for example, you could do a deep dive comparing the corporate governance of ASCST versus MSTR, pinpoint the non-Bitcoin factors that might be scaring big money away.
Okay, that's interesting.
Or another idea, you could analyze ASCST's history, around the initial merger hype, and suggest how management can rebuild credibility. Maybe that means just being consistent and, frankly, a little boring for a while.
Yeah, stability builds trust.
Absolutely. And a third thing, you could actually model how much institutional demand, not retail FOMO, would be needed to push that multiple from 1.3 to 3x. That adds some serious rigor.
I like that. It moves from observation to prescription. Okay, let's pivot to the mechanics of actually hitting $10.
The math problem.
$8 billion market cap for that, which is only possible in two scenarios. Bitcoin goes to what? 200,000 plus?
A hyperbull run, yeah.
Or the company takes aggressive corporate action. A reverse stock split, massive Bitcoin buys, something drastic.
And this is where the current analysis feels a little soft. The weakness is that this need for corporate action is sort of buried in the bull case. It's presented as an option.
When it's really not, is it?
Not at all. It's a prerequisite. If your target is so far out there, you have to be honest about the mechanics. The report needs to just state it. A 1-for-10 reverse split, or something like it, is probably required to get the optics of a double-digit share price.
It's not a backup plan, it's part of the main plan.
It is the main plan. So the suggestion is to dedicate a whole detailed section to modeling the immediate impact of that action. Treat the reverse split as the most likely path to that psychological $10 mark.
So you're saying really lean into it?
You have to. For a concrete example, model that 1-for-10 split. Show how a, let's say, $3 or $4 billion market cap gives you a $3.68 stock now.
But becomes a $36.80 stock post-split.
Exactly. And then, the really crucial part, analyze how quickly that might fall back toward $10. Or, if you want to go the other way, you have to calculate exactly how many more Bitcoin they'd need to buy to hit an $8 billion market cap without changing the massive 815 million share count. That's the kind of detail that makes a thesis compelling.
That clarity is essential. Okay, critique number 3. This is about market momentum and technicals. The report has a good TA section, but it needs to be integrated better.
It's on its own island right now.
Completely. So the argument is that the technical analysis, like the gap on the chart and the key resistance levels, should be woven directly into the fundamental argument as triggers.
Yes. Triggers for the retail mania, or the short squeeze you're talking about.
The report identifies support at $1.05, resistance at $1.50, and $2.50, and that huge gap up to the old highs around $13.
All good data points, but the weakness is that the section is just observational. It doesn't explain how breaking, say, $2.50 actually ignites the fundamental story.
How it connects to the Bitcoin bull run or the corporate action.
Right. If your thesis depends on retail mania, these technical levels are the tripwires. They have to be connected to the narrative.
So you're saying a break of $2.50 isn't just a technical event, it's actually a fundamental re-rating?
That's precisely it. And that's the suggestion. Reframe these levels as inflection points. Show how breaking a key resistance level is the catalyst that ignites the FOMO you need to break away from the simple book value calculations.
Okay, give me an actionable way to do that.
Sure. You could explicitly state that the $2.50 level is the psychological gatekeeper. Frame it like this. A move past $2.50 combined with Bitcoin approaching $150,000 is the required trigger for the market to start trying to fill that gap. You're making the TA predictive.
I see.
Another angle is to tie the $1.50 resistance to the premium. Does hitting $1.50 automatically put ASST at a 2x premium? If so, the stock becomes fundamentally more attractive just by catching up to its peers, even before Bitcoin really moves.
That makes the whole thing feel much more dynamic. It connects the chart to the money. Okay, last point. And for me, this might be the biggest hurdle in the whole story.
Dilution.
Dilution. The dilution danger has to be elevated from just another risk into the central structural conflict of this entire thesis.
100%.
The report correctly notes that ASST bought its Bitcoin by issuing shares, and that doing more of that could keep the price down even if the market cap goes up.
815 million shares. It's just a mountain of paper. And the weakness in the report is that it lists dilution next to other risks, which totally minimizes its importance.
It's not a risk, it's the risk.
It is. It's the core mathematical factor that decides if a $4 billion market cap means a stock price of $4 or $10. It's the conflict at the very heart of their strategy.
It's like trying to fill a bucket that has a giant hole in it. The value comes in, but it just leaks right back out through the share count.
Perfect analogy. So, the suggestion is to restructure the entire risk section around this. Position the dilution paradox right at the top.
Make it unavoidable.
Exactly. Analyze the brutal impact of that 815 million share count on the $10 target. Show that it basically necessitates either a truly epic Bitcoin rally far beyond expectations or that corporate action we already talked about.
How do you make that really punchy?
Create a subheading, something like the share count barrier, why a $1.5 billion treasury still means $3.68 a share. That immediately shows the mathematical drag.
That hits hard.
And then you have to detail how the whole hyper-Bitcoin bull run scenario depends entirely on the company not diluting any further during the rally. Issuing more shares then would just cap the gains and kill the $10 dream right when it's closest. The reader has to understand that trade-off.
This has been an incredibly helpful breakdown. So just to summarize the 4 main points for the listener to work on.
Let's do it.
First, strengthen the case for that MicroStrategy level premium. Give a real roadmap for management to earn it. Second, reframe corporate action, like a reverse split, as a necessary prerequisite, not just a possibility.
Right. Third, integrate those technical levels, the 150 and 250 marks, as the actual triggers for the fundamental story to catch fire.
And finally, elevate dilution from a simple risk to the central structural conflict that the entire investment thesis has to overcome.
Look, the report that was submitted is strong. It's data-driven, and the core idea is there, even if it's ambitious. But I think these refinements will really maximize its power.
It moves the argument from this could happen to this is the precise and unavoidable path for it to happen.
Exactly. The prerequisites, the triggers, the whole chain of events.
If you do implement these changes, please send the updated report back our way. We'd love to take another look and see how the analysis on this ASST catalyst has evolved.
We absolutely would.